Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 16th, 2026, and we're diving into State Street's fourth quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss State Street's performance, especially given the strategic moves they've made recently.
Revenue and profitability overview. Let's start with the top line. State Street reported a total revenue of $3.7 billion for Q4 2025, marking a 7% increase year over year. Despite this growth, net income saw a decline. John, can you explain the dynamics here?
Absolutely. The revenue growth was driven by higher fee revenue and net interest income. However, net income decreased by 5% due to increased expenses, including notable items like repositioning charges. The adjusted EPS of $2.97 exceeded the forecast of $2.82, which is a positive sign of operational efficiency.
And what about their profitability metrics?
State Street achieved a pre-tax margin of 25.0%, which is a solid performance. Their ability to maintain a strong margin despite increased expenses highlights their effective cost management strategies.
Strategic initiatives and market position. State Street has been making strategic moves in the market. Their assets under custody and administration reached $53.8 trillion, a 16% increase year over year. What are the key drivers behind this growth?
The growth in AUCA and AUM, which increased by 20% to $5.7 trillion, is primarily due to higher market levels and net inflows. State Street's strategic investments, such as their partnership with Apex Fintech Solutions and the launch of their digital assets platform, are positioning them well for future growth.
They also launched 37 new products in Q4. How does this impact their market position?
Launching new products enhances their market competitiveness and allows them to capture more market share, especially in the U.S. low-cost ETF suite. This strategic expansion is crucial for maintaining their leadership in the financial services sector.
Expense management and notable items. Moving on to expenses, State Street reported a 12% increase in total expenses. Can you break down the factors contributing to this rise?
The increase in expenses is largely due to $206 million in notable items, including repositioning charges related to workforce rationalization and real estate optimization. Excluding these, expenses rose by 6%, driven by investments in technology and higher compensation costs.
How significant are these notable items in the overall financial picture?
These charges are part of State Street's strategic restructuring to optimize operations. While they impact short-term profitability, they are expected to yield long-term benefits by enhancing operational efficiency and reducing future costs.
Capital and liquidity position. Let's discuss State Street's capital and liquidity position. Their CET1 ratio stands at 11.7%, and they returned $635 million to shareholders. What does this indicate about their financial health?
State Street's strong CET1 ratio and liquidity coverage ratio of 106% reflect a robust capital position. The $635 million capital return, including $400 million in share repurchases, demonstrates their commitment to returning value to shareholders while maintaining financial stability.
How does this position them for future growth?
With a solid capital base and strategic investments, State Street is well positioned to capitalize on growth opportunities and navigate potential market challenges effectively.
Key takeaways. In summary, State Street has delivered a strong performance in Q4 2025 with significant revenue growth and strategic investments. Their adjusted EPS of $2.97 beat expectations, and their capital return strategy remains robust. John, any final thoughts on their investment prospects?
State Street's strategic focus on innovation and market expansion positions them well for future growth. Their strong financial metrics and commitment to shareholder returns make them an attractive investment option.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on State Street's performance in the comments below.